Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January the 8th, 2024 at 1:08 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only Baron of Bonds, Brandon Beaver. Brandon, how are you?
I'm good. How about you?
I'm a little tired. I'm better than last week. My voice is mostly back to normal here, so I've recovered. I think that sickness was is hitting everywhere, but I think I got the end of it like always. I just need to get around people more often so I get the beginning part instead of the end.
Yeah,
I don't know.
the beginning's always the worst part.
Yeah. So no, doing well, doing well. A lot of news come this past week, a lot of earnings, and we can continue with the earnings highlights, but I think majority of all the financials have gotten out of the system. This is our last podcast for January.
Yeah.
It's a time for me to mention the January barometer again. Last chance to see if it's going to be correct this year. How did we end up in January? You know,
Yeah.
and I see Brandon pulling out his phone already. Like, how did we end up in January? Because it's been up in the air of how we were going to end up and whether or not it was a positive month for us. I believe we are up, are we not?
Yeah, we're up. We're up 3.12%, but there's a plethora of earnings coming next week. The last day of the year. I think that's on Wednesday, I think.
Last
Uh,
day of the month, yes.
and so
Not Wednesday. It's is it Wednesday?
I
I
think
don't
it's
know.
Wednesday.
It is Wednesday.
Wednesday's the 31st, I think. Yeah, Wednesday's the 31st, and we've got a good amount of tech earnings to get through before the end of the month is
Uh-oh.
we'll see. And those are the market drivers.
Those are the ones heavily pushing the markets right now. It is very tech heavy in market movers. It's either the tech or the Fed saying something that's been really affecting the markets lately. Um, so very interesting. Yes, we will see on Wednesday what big names we got. Any
I
big
don't have
names
them
or
off the top of my head, but I know
oh,
we've got Microsoft, Apple, we've got a bunch coming up.
Microsoft already reported last week, dude.
No, I think it's this week, isn't it?
Oh, come on. We've been doing podcasting and covering and running investment clubs for almost what now? I think we're
Yeah,
coming up on
I
10
think it's
years.
next week. Hold on, let me look.
We've been coming on 10 years, and how can we get the Microsoft earnings wrong? Here, come on, buddy. We've been doing this for so long. Yeah, it's
I
January
was
30th. It is. You're right. The
yeah,
earnings call. Yeah.
yeah. Come on, buddy.
Yeah, right. We've been doing this for almost 10 years, Brandon.
So it's next week. Yeah, that's what.
Yeah. All right. Yeah.
So I was right.
You were right. You were right. You're right. I was wrong. All right, let's get into it. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live discussion, the back and forth, the bicker and the banter right here on the show for you. And today, like always, the Baron of Bonds. Take it away.
Yeah, okay. So Netflix reported earnings last week. A pretty good earnings report for them, actually very good. They added 13.1 million new subscribers. That was 50% more than Wall Street had projected. That was the most the company had ever added in a single quarter. And man, when you think that Netflix is mature and can't possibly add anymore. Now I know, they cracked down on the password sharing thing, and that's got to be part of it. But I think you're only looking at like 20 million or 30 million, and I could be wrong about that because I think we're kind of at the tail end of that. Um, I think this is mostly organic growth. Um, but the most the company has ever added in a single quarter, save for the first quarter of 2020. And that was the COVID-19 outbreak.
Do they
So
know if
this,
this is the ad supported that's the most being added, or is it like other plans, family plans? What type of plans are being added the most here? Do they have those
I think,
numbers?
you know what, the ad supported revenue only makes up for 6% of the company's total revenue right now. But I don't know how much, who went to where. But that ad supported revenue almost doesn't make much of a difference to me because those ads are bringing in a decent amount of money for Netflix anyway. So it kind of adds up equally. And then some analysts actually project that eventually Netflix ad supported tier will be more profitable than the other tiers. That remains to be seen, though.
Yeah, that's the future. That's where everybody is pushing towards. Disney, Hulu already went that way. Lots of places that are going to ad supported tiers, and so that's why I was asking the numbers on the breakdown of
Yeah.
who got what.
Co-CEO Greg Peters, he said that the ad market for connected TVs alone globally could be about around $25 billion a year. Right now, Netflix is at 2.7% or $2.7 billion a year. So that's a small percentage of what they're aiming towards, I think.
Yeah, and with everybody streaming, like, are they gonna see like gone the way of like if I want to watch CNBC, do I have to get like the NBC package now and stream that? And or do if a Bloomberg, do I have to do a Bloomberg special package and stream that, because are they going to get rid of all these cable bundles? I like Hulu Live. That's what I use right now.
Yeah.
And with like all these streaming services still gaining subscribers, I'm worried they're going to get rid of that because people are like, well, I don't need live TV. Well, some of us do. I like my live news,
Yeah.
stock news channels, and I like live sports.
Yeah, that's what I do. We have Hulu Live too. I actually think that we're going to start seeing a reversal of the oversaturation of the market and more consolidation here. Um, but before I talk about that, because that's actually something I was going to get into, here's an interesting statistic. Netflix added more subscribers on its own than Wall Street had predicted for Netflix, Disney, Warner Brothers, Discovery, and Paramount combined.
Ooh, nice.
Yeah. So big knockout of the park there. Here's one of the reasons why I'm looking towards more of a consolidation in the market. There's a lot of streaming losses going on by other competitors. Pressures from investors to stem those losses are actually influencing companies like Warner and Disney to license back some of their own shows to Netflix in return for cash flow. 13 of the 16 movies in Warner's DC Universe franchise are now streaming on Netflix.
Hmm.
So,
That is very interesting because I have Max. I have a Max subscription, so Warner and HBO Max are same company. And so I get all these DC Universe anytime I want, but it's interesting they're leasing them out.
yeah, I think companies kind of overdid the whole streaming thing during COVID, and now we're kind of paring it back again a little bit.
Well, I
Uh,
mean, yeah, because I got Max because I like sci-fi movies, and I was a huge Dune fan from the Dune of the 1980s. So when they went ahead and released Dune, it was still COVID. Movie theaters were barely just opening up again, and so they just released Dune straight to HBO Max. And so I bought Max just to watch the new Dune movie, and I just kind of kept it, and I got into some of the shows and stuff, and now I have Max. But I will say this: because it's a two-part movie. The second movie, I am planning to go to theater. I already have a plan. I already have my daughter and I are going to go watch it together. So
so you're talking about Dune. I'm about to talk about wrestling, and I just had the epiphany that we're both dorks.
yes, but just so hold up. Yeah. So if you're listening right now, like, I like Star Wars, sci-fi, all this kind of stuff. Brandon's really into wrestling, and if you meet us at a party, we'll sit there and talk stocks with you till you're dead in the face. We are very exciting guys here. Like, just
Yeah.
wow.
Wow. Exciting lives. Well, for us, it's exciting,
Yeah,
right?
I enjoy it. I love it. So I mean, yeah, you know.
Other people buy Max for what is it? Sopranos? Is the Sopranos is on there, right?
Yeah, that's an older one, but yes, Game of Thrones would be,
Yeah.
yeah, and then the zombie mushroom one based off the game Last of Us.
Okay.
Yeah.
All right. Well, speaking of Netflix and wrestling, it was announced that there was a 10-year deal. The WWE is going to bring Monday Night Raw, or actually, they're just calling it Raw. So I'm curious if they're going to move it to another night, but we'll see. Netflix had actually been talking about getting into the live sports market. And this is something that they've been wanting to do for a while. And this is a $5 billion deal. to bring Raw to Netflix for 10 years, with Netflix having the option to opt out after 5 years, but then also having the option to extend for another 10 years after. And they're gonna produce Monday Night Raw and air it here in the United States. Outside of the United States, Netflix will get Raw plus the big three pay-per-views: SummerSlam, Royal Rumble, and actually make it the big four because it's SummerSlam, Royal Rumble, WrestleMania, and Survivor Series. So they're going to get that outside. NBC Universal still going to keep the live events here in the United States. So the pay-per-views or premium events, whatever you want to call it, are staying here in the United States on Peacock, while outside Netflix is getting those things outside of the United States. $5 billion deal is pretty substantial. NBC Universal's USA Network, the previous deal that they hold Raw until I think it's the beginning of January of next year now. That deal was $1.32 billion. So this is a substantial increase for WWE. And I think that investors and Wall Street generally look at wrestling, it's a, almost a foreign entity. They don't really look at it as they don't take it seriously, but there's a serious amount of money here. I mean, WWE has been breaking records for live event attendance and gate numbers for like 2 years now, ever since we came out of COVID.
Didn't they just break a record at a Major League Baseball park that the park can't even sell out itself?
Yeah, there's probably the Royal Rumble, which happened last night.
Let me see here.
I think it was in Tampa last night. I can't remember, but I know that was also record breaking. Royal Rumble last year brought in, I think by itself, just that one single live event last year brought in over $7 million in one night.
Gotcha.
We don't have the numbers for last night, but they were record breaking, so they're probably going to be higher.
That's probably it then.
We also had the news that Dwayne "The Rock" Johnson is taking a board seat on TKO, which is WWE's parent company. And then the day after that, new allegations of sexual misconduct, rape, all kinds of different disgusting, gross things were leaked. I don't know if I want to say it leaked, but announced that they were coming out against Vince McMahon, WWE's former CEO. In reaction to that, TKO pushed Vince McMahon out, or Vince McMahon stepped down, whatever you want to say happened there. The other employees that have been implicated are gone right now. There's a wrestler that has been implicated as well. That did not appear on last night's Royal Rumble, and this rumor and innuendo there is that he did not appear because of these allegations, so he may not have. I don't know if I want to mention him because he's not mentioned by name. It's just people are guessing kind of and giving probably a very good guess as to who it was, but he wasn't there anymore. I think I'm tepidly bullish here on TKO. There's probably going to be more news coming out as far as these lawsuits go. But the TKO, what it is, it's a parent company now of both the UFC and the WWE. And the WWE going global, I think, as far as this Netflix deal goes, you can go ahead and say something. I'm about to get into a big long thing here, so go ahead, Dave.
All right. So it's always sad to see people make bad decisions in their life. We want everybody to make good decisions and do the right thing. Unfortunately, there are bad apples, bad actors, people who, and then just people who make bad decisions. There's all kinds of those things in there, but they seem to have a culture that continues to push this out. Brandon, I know you're a big fan of WWE and TKO Incorporated, but unfortunately, this is nothing new with them. This is sort of like Bowen with supply issues, is TKO with these allegations, and they need a whole culture change. They need to root out everybody in the corporate there, like Activision did when Activision had these issues.
Yeah.
Everybody got fired and everybody got rooted out, and they just brought in all new management and said, change the culture.
Well, they kept the CEO, which was unbelievable to me.
Yeah.
And I think Brian Kotek is still in charge at Activision, even under Microsoft, which is kind of blows my mind.
Yeah, because
But
Microsoft is really, as far as I've seen on news articles, they've always been very, strict. And if anybody has any suspicion, they just let them go right away.
yeah, yeah. And yeah, and it's Satya Nadella, and I'm probably butchering his name. He's the CEO of Microsoft. He's very employee oriented, very culture oriented. WWE does need the same thing, but I think a lot of these things came from one single person, and that was Vince. The steroid trial in the 90s. There's even a whole, um, controversy over Vince McMahon paying off police officers and the local detective agencies in the 1980s to not charge Jimmy Snuka with killing his girlfriend.
Wow, really? I
Which,
did not
yeah,
even
and
know
then
about
by the
that.
way, yeah, and then I think it was like 10 years ago, Jimmy Snuka lying on his deathbed finally had a trial, and I believe he was convicted. I'm speaking kind of out of ignorance here, but there was a trial that was happening there, but he was declared unfit to go to jail because he was dying anyways.
So yeah, get rid of him. If he's the source of the cancer in the company, then they might have a good opportunity for growth.
Yeah. So he's gone. He's gone, and Paul Levesque, Triple H, he's mostly in charge at the WWE. I think honestly that all these controversies that were involving Vince McMahon, that's probably what scared off Disney and NBC Universal from acquiring WWE. And it's also probably why WWE decided to enter into this umbrella structure with TKO Holdings being its parent company there. The holding structures, they kind of serve to limit financial and legal liability exposures of the holding company. Um, And at the same time, I think that WWE was kind of looking back at the Time Warner manager or merger of the late 90s and early 2000s. For those of you who do not know, Time Warner and AOL merged, and it was supposed to be like the deal of the decade, really the deal of the century, the greatest deal of all time. It was going to lift all boats in the water. It was going to be so amazing, and it was mostly a failure. And at the time, Time Warner owned a company called WCW, which was a um, rival to WWE, and one of the only rivals to WWE that ever beat it, famously in ratings for 83 straight weeks. Um, they and when that merger failed, WCW got sold off back to WWE for I think like a mere $1 million. Um, and part of that was that the um the executives at AOL Time Warner had absolutely no idea what they were doing with the wrestling company. They didn't like it, they didn't care for it. Um, at one point there was a storyline where one of the characters on TV and the guy that used to kind of control WCW, Eric Bischoff, fake fired a referee on television in front of his family. And the funny story about this is that the next day, Eric Bischoff got a phone call from AOL Time Warner's Human Resources Department yelling at him for firing an employee on television because they didn't know it was fake.
Are you serious? That is too funny, man.
Yeah. So, and then he had to explain to him, no, this is a storyline. This is wrestling. None of what you're seeing on television is real, right? So part of this deal with TKO and this being an umbrella company is that WWE still gets to manage itself. They're not being dictated by the CEO of TKO. Triple H still gets to control WWE. Dana White still gets to control UFC. And there's very little meddling done by the board of directors. Now, with that being said, one of the big positives of putting Dwayne The Rock Johnson on the board of directors is that he knows the language of wrestling. He knows what needs to be done in wrestling to make the crowd happy. And so now Triple H has a guy on the board that he can give a call, when he needs something. So those are the two big benefits. I think going with TKO instead of Disney. Now, WWE kind of gets to control itself and make its own decisions for what happens under its side of the company. But then also they're more protected from all of these lawsuits that are coming out from the idiotic things that Vince did. Look, even if you believe, that this relationship with Vince and all of these other people were consensual, the a good rule of thumb is if you're in that kind of role, don't do anything that is going to require you to sign an NDA. It's just stupid, and especially if you're going to go and pay off these people with company money, which is what WWE or which was what Vince McMahon was doing. And I thought that was illegal, and to not report it to shareholders.
Yeah, so a lot of bad things happen there. You got to use common sense. I've done management at companies before for over 15 years. You just got to use common sense when you're in a role of some type of management, and just think about it. Think about it before you do it. Think about it before you say it.
Yeah.
But yeah.
So and then
So
also,
so do you think this is at this you would buy the company at this moment? The
you know what? I'm
stock.
tepidly bullish on it. I would go underweight, but I would buy. But I would go underweight. WWE's last fiscal year, 2022, that's reported because when the merger happened, all you kind of get for the third quarter of 2023 was from the merger time to the end of the quarter, and that's like a couple of months, and I think that was like $50 million for that point of time. So let's look at WWE's last fiscal reported year before they took this merger. It was $1.3 billion. That was revenue. That was the highest in company's history. The company also reported a record operating income of $283.3 million, a record adjusted EBITDA of $384.6 million. WWE had returned $75.7 million of capital to shareholders, including share repurchases and dividends paid. I think they're going to break that record when we get their next full fiscal year. They're doing really well. Netflix is an incredible deal for them. A lot of comedy and drama and stuff like that doesn't really translate overseas, but people don't realize this. Professional wrestling is very global. And professional wrestling and the kind of drama that you see in the ring, that stuff does translate through Latin America, Asia, Europe, everywhere. And the kind of global reach that Netflix has is going to increase, I think, viewership for WWE and interest in WWE substantially.
Gotcha.
Now, the one thing that I was kind of looking at here also for TKO that made me more bullish than what I was that the UFC was looking to expand into Saudi Arabia. And Vince McMahon was kind of going to head that charge with Dana White into Saudi Arabia because WWE's made a good relationship with the Sauds. They've got, live events going on over there. UFC wanted to do that, but now with Vince McMahon being ousted, I don't know how that's going to happen.
Yeah, I saw some headlines briefly because, like you had mentioned, you were going to talk about this. I pulled it up. I saw some headlines about Saudi Arabia deal. There's a lot of money there. That's why in boxing, like in particular, Tyson Fury, the Usyk fight coming up was going to be in Saudi Arabia at one point in time due to the money that it draws out of that part of the world. A lot of sports are the golf, PGA Tour. I mean, all that happened over the last year in Saudi Arabia deal, but. I'm not a buyer. You haven't convinced me. I still see.
Okay.
I want to make sure all the trouble's gone before I would buy in.
Hey, you know what? There's a substantial amount of depth from this merger too that exists, but I think there's a lot of growth coming for at least the WWE. And if UFC can figure out how to go global and compete with K1 over in Asia, you gave me that look, but if you ask anybody from Korea or Japan about MMA, they don't care about UFC. They've got their own things that they do over there,
They do have their own things to do. They have a lot of other smaller sports. Well, not smaller to Americans, but they're big there and they get millions of viewers. UFC does great with live events. I just went online recently to go see if I could get some tickets at a live event of getting out of town here coming up, and the cheapest ticket, the nosebleed, right? Top of the, the huge stadium, top of the ring, $450. If you want anywhere in that 100 section that surrounds like fields and all that stuff, you're looking at least 1,500, 2,000 a ticket. If you want floor level right outside the ring, you're looking at 12,000,
Wow.
15,000 a ticket, dude.
This is 1980s, 1970s, and 60s boxing levels of prices, basically.
It's getting way up there in price. So yeah, you got
Yeah.
to have some money to be sitting on the floor there, or be given a ticket by UFC because they want your face on TV
Yeah.
because they have those too.
I got a decent amount here I can still go into. Do you want me to? I think I've went over my time limit, but
No, I mean because I think we've covered everything we need to cover about the WWE, TKO,
yeah.
Netflix, and Netflix earnings. What else did you have?
Intel.
Let's
I mean,
go.
we
Let
can
me go
talk
into
about
oil
that.
first. Let me cover the oil thing
Let's
because
do
I think
oil.
this is
Yeah.
yeah, this is really big, and a lot of people have. This has been headline news. Was everything going on with the Red Sea and the Houthis and strikes and shipping containers? We covered the shipping recently in a recent podcast, and its effect. It costs $2 million more for all these containers to go around the Horn of Africa. And on that last podcast, when I was talking about it, I did mention that the Houthis have not attacked any oil tankers that I was aware of, right?
Yeah.
Well, all of a sudden, over the past week, that has now changed. The Houthis have attacked a Russian oil tanker that was traveling through there because the oil tankers felt that they were safe because they're transporting oil, and that's a main source of income for even Yemen. And so it they got attacked, and immediately the price of oil jumped $2 a barrel immediately off the news of the Russian oil tanker being attacked. Because now all of a sudden, or is oil safe? Is oil safe coming through the Red Sea area? And that was definitely a it's definitely a concern now because that was something seen to be safe, something seen to be, hey, we don't have to worry about this. We can continue going on with this. But oil has now, I think oil is going to be just fine. I think that was a quick 5-minute reaction, and I don't think it's going to jump up too much more. And here's why. So just yesterday, 3:34 a.m., this came over to Reuters headlines. It was from Russia's Gazprom. Alexander Dukov, the head of Russia Gazprom Neft, said on Saturday there was a slight surplus on the global oil market. He also said that the new oil supply cuts implemented by OPEC plus groups of leading oil producers from the start of January, so they started it in January, that's going to balance out the market. So there's still a surplus of oil. So that's why I'm not too concerned about oil skyrocketing back to $100 a barrel based off Houthis sending out some rockets. But and I also feel this way too because now Houthis are attacking Russian oil tankers, and Russia is the number one supporter of Iran, who backs Houthis. I do believe there's going to be some settling down of the Houthis here, and the reason why we're talking about this on a stock and investment show is I believe that's going to help with the shipping because now you've attacked someone who is somewhat of a indirect ally of you. Now they're going to say, hey, you need to slow it down and stop. And so I think that's going to help shipping costs and get things moving again. Because I think they just stretch their hand out too far here with this, even though oil says they're going to be just fine. But also there's a lot of bad oil sites. So a lot of oil companies are not, like Pacific Coast Oil Trust announced there's going to be no January cash distribution. So they're going like hurting on the cash front there. Um, the oil count did rise according to Baker Hughes. But here's one point, not included the oil, but this is natural gas. And the reason I'm bringing this up is oil companies, a lot of them are also natural gas companies. And the example I'm going to give you is ExxonMobil, ConocoPhillips, and so on and so forth. They are also natural gas companies. So here's the headline. And this came out in Reuters. It came out on January 26th, so on Friday at 12:03 p.m. The headline reads Biden pauses LNG export approvals after pressure from climate activists. The author is Timothy Gardner. But here's what this has to do with natural gas. President Joe Biden on Friday paused approvals for pending and future applications to export liquefied natural gas from any new project, and it could delay decisions on any new plants until after November 5th election. They made it very much an election political stance here on this. I don't like doing that with the economy. Don't play politics with our economy. Do what you have to do to take care of the economy. But the Department of Energy is going to conduct a review during the pause that will look at the economic and environmental impacts of projects seeking to approve LNG to Europe and Asia, where the fuel is in hot demand. The problem here, and this is where you can have a spike in natural gas price, is the fact that Europe is having trouble because what we found out was Ukraine was sabotaging the natural gas lines from Russia to Europe, causing natural gas shortages. Government had to in Germany, they had to subsidize people because they couldn't afford the natural gas bills because it was so expensive. It's still a shortage of natural gas in Europe. A lot of their appliances and heating runs off natural gas. They are really needing this natural gas from the United States. And so this really hurts our European allies here. And I believe it's going to push the price of natural gas up. So if oil is staying the same, I would look at companies that have a high natural gas component to their balance sheet, such as Chesapeake Energy. That is one that is commonly traded, and most people know the name. Chesapeake Energy is one that you could take a look at. Another one that doesn't quite have as high natural gas, it would be Occidental Petroleum. Funny enough, Warren Buffett has owned a big portion of this one. But I would want to see exactly how much natural gas it has. But that's what I'm concerned about is how this is going to affect the cost of natural gas. Chesapeake is definitely one. I would look at the PG&E Corporation. Another one I like is Constellation Energy Corporation, the NASDAQ symbol CEG. Now, I'll get into whether or not I like these to buy, sell, whatever you based off this news, but let me get into some of these companies. Constellation Energy, here's something very interesting about them. Back in May of last year, they actually set an industry record after blending high concentrations of hydrogen and natural gas. The test was done in collaboration with the Siemens Energy and Electric Power Research Institute. Basically, it revealed that a generating station could operate on 38% hydrogen blend, and hydrogen is the cleanest form of gas to burn here. So this is one of the most notable ways of producing clean energy. So by hurting these companies from selling their natural gas overseas, you're actually stopping them from producing some of the cleanest energy that we have, which is counterintuitive to what the current administration is attempting to do. Now, am I saying buy these companies based off this news? Yes, natural gas is going to go higher, probably, but these companies can't sell it. So the problem is the cost of the cost is going higher, but the current administration has limited in certain states what natural gas appliances can be sold or used, and now we're limiting the export of it. So some of the it's very, yes, they make more money off each amount they sell, but how much can they really sell? Brandon, thoughts?
Might just be more profitable and safer to buy the commodity.
Yeah, I mean, yes, it is more profitable and safer. I would guarantee you on that, because I do believe that natural gas should go higher since Europe's demanding more and more and more, and they can't get enough. Yeah.
Yeah.
So big demand, but we can't fill it. So
and it doesn't seem to be stopping. That's been going on for, over a year now.
Yep, exactly. So that's something to keep an eye on, and something I wanted to make sure I covered before we moved on to anything else. I do have two quick headlines, if you don't mind.
Sure, go ahead.
All right, cool. I actually have three, but I really only wanted to do these two here. So first one, Brandon, your thoughts on this? India and France agree on a joint defense production. So India and France have agreed to work together on joint production of defense equipment, including helicopters, submarines for the Indian Armed Forces. Before now, you're saying is this something new? Is this because of Boeing issues? No, France has worked with India before. France is the second largest arms supplier to India, second to Russia. Russia's been really the number one. But India has always relied on the French fighter jets. But this came after a summit between Macron and Modi. They've had numerous summits. They continued a good partnership there. French, some things in the note from a stock and investment wise. French jet engine maker CFM International announced an agreement with India's Alaskan Air to buy more than 300 of its LEAP 1B engines to power 150 Boeing 73 MAX aircraft. Very interesting there.
Yeah.
That they're using Boeing engines in their aircraft because Airbus is French, right?
Yep.
And so India and France agreed to intensify cooperation in the Southwest Indian Ocean. Where's it at here? Here it is. India's Tata Group and France's Airbus have signed the agreement to manufacture civilian helicopters together as well. So this is really going to boost the revenue there for India's Tata Group and France's Airbus. I would also take a look at CFM International. I'm not too familiar with them. But this story is making me actually just take a look at them. I want to figure out who they are and see how they fit into the supply chain. And maybe that's something Boeing should go after if they're actually a good, solid supplier. Thoughts?
Airbus is I mean, it's kind of fairly valued right now. It's had good performance over the past year though, and really good performance over the past 5 years. Yeah, good news for them. Good news for Airbus.
Yeah, it is good news for Airbus, and I found it interesting that Russia was the largest supplier to India, considering India's has large ties with Britain, good ties with America, and I knew about the French deals before, and I was unaware of how much they actually buy from Russia. So
Complicated ties with Britain, but yeah.
well, I mean,
Good now.
all right, I don't want to get political here, but pretty much a lot of the world has complicated ties with Britain, even the United States. So, I
Yeah.
mean, come on. That is what it is. We can't change history, but we can move forward. All right. Last one I want to get into, and this is something we covered, I think, a year and a half ago, and it's making headlines again. This was a headline on CNBC. It was published yesterday at 7 a.m. The author here is Michael Sheets. The headline title reads, "A handful of space companies are running out of cash and time. Here are three that are risk." So it goes in to acknowledge the Virgin Orbit, how it flamed out last year, and it goes in to talk about who's also at risk of delisting or acquisition or even bankruptcy. So the first one they go into is Momentous. It's a space tug operator. I didn't know we had space tugs already, but apparently we do. It was once valued at over $1 billion, but Momentous did a 1-for-50 stock split last year. Shares currently trading near 80 cents, so the valuation's currently at $7 million. I would hate to be the loan company that gave them a loan. Astra, they've been conducting piecemeal financing rounds from a handful of investors, so they're trying to do it privately. The company's founders floated a take private plan in November, but there's been no word on whether or not it's got approved. Once valued at over $2.5 billion, Astra's current valuation is under $50 million. So that's a very another one. Valuation has dropped. And the last one here is Citus Space. It's a little known space company that went the traditional IPO route in late 2021 and began trading on the Nasdaq at near 200 million valuation. Basically, they build their own satellite constellation. They test data for a variety of customers, so it's more of a satellite testing. Sidus has raised, or Sidious, I don't know. Sidus has raised small amounts of funding through public stock offerings of $5 million or less since its IPO, but it had less than $2 million in cash at the end of September, and it's currently trading at a $9 million valuation, from 200 to $9 million. And just last month, they performed a 1-for-100 reverse stock split. Wow. To regain compliance with the NASDAQ listings. I did not read that the first time through. Wow. I could go into more of this article, and it talks about everything that where everybody's gone wrong, all these small companies that we never really heard about or did hear about, or somebody was taking a chance on, hey, I have this small company, the space exploration is taking off. We should invest in it. And we've heard that for different type of things like marijuana companies in the past. And right now we're hearing it for AI companies. The reason I bring this up is these valuations at the height, you saw what they were and you see where they're at now. I hear AI just ringing off the bell. Everybody's buying AI companies. Keep that in mind. Brandon, thoughts?
Yeah, I think the same thing. There's an old saying that supposedly Wayne Gretzky said skate where the puck is, not where the puck was. And I agree with that, but some of these companies are just skating blindly skating. There's no puck there at all. In the
They're
space,
just hoping that a puck shows up.
yeah. There's no way, okay, so the best companies right now, SpaceX, for
Yep.
example, and yes, Boeing, that's been into the space business, they're going where they see the puck going, the puck that already exists, which is space defense. And that's where they're getting all of their money from right now. And they can use those profits to then go into space exploration should that market ever actually become a thing. Just because William Shatner went up into space for a split second, that doesn't all of a sudden mean that tens of millions of people from the Earth are going to start going up into space and visiting the moon and Mars.
I don't know. Hey, in 30 years, man, who knows?
Maybe, but that's the thing. Who knows, right? We know what's happening right now, and we have a clear path going forward when it comes to the so-called Space Force. Why would you not align your profits and interests right now with those things rather than a, no offense, Dave, sci-fi dream?
Right? Yeah, SpaceX is definitely the biggest winner here, but they're not publicly traded. So unless you are one of those venture capital investors companies, you're not really going to get in there with SpaceX. But they are the clear winner and leading the field right now in it. I think they're actually I would put them close to competing with governments
Yeah,
as far
yeah,
as what they're doing. Yeah.
they are for
Yeah,
sure.
they are competing with a lot of governments. So SpaceX is definitely the clear winner. You're talking about Blue Orbit with Amazon and Jeff Bezos. That's still in operations. They're still doing things with that. And so that was, you could say, successful. I don't know if it's profitable though. So it depends on what the goal of the company was. Jeff Bezos has enough money to pay for that himself, which he was very adamant about saying that this is all paid for private funds, no public funds used. That meant they could do whatever they want with it, right?
Yeah,
And so Amazon has enough money to pay for that and do what they want with it. So if the goal was just to make it a tourist, send people up, then they accomplished the goal and it was successful. So
yeah.
it all determines on how they view that as successful.
So
Versus SpaceX has specifically said, we want to go out, we want to colonize Mars, we want to put a base on the moon, we want to do all these things and expand into their solar system.
yeah, okay. Jeff Bezos isn't actually bald. He shaves his head. I'm just
Wow.
and you know why? What's the captain off Star Trek? I don't watch Star Trek, but the bald guy.
Jean-Luc Picard.
That's why. That's why
Okay.
so he's
So
a big
yeah, I'm a
part of
geek. I know that off the top of my head. Earl Grey, engage. All right. But yeah, those are the those are the headlines I have for right now. Brandon, did you have anything else you wanted to bring up, man?
Yeah, we'll quickly hit Intel's earnings. They beat estimates, but really, really negative guidance, or at least negatively viewed guidance. Revenues for this year expected to be well below analyst estimates. Interesting to see that Intel still, their forward priced earnings ratio and current priced earnings ratio are still higher than NVIDIA.
That is crazy considering they've lost a lot of sales. I'm glad I got out profitable in Intel when I did. I was very upset with Intel and their direction. They had everything going with them. They were signing deals with governments. They were signing deals with state governments. They were getting money, and then they just started doing nothing with it. And I was very you had everything going for you. You were a big name. You had governments giving you billions and billions of dollars to build plants, and you just dropped the ball.
Yeah. Yeah.
It's like you're CJ Lamb and you can't catch a pass. So no, I'm just kidding.
Yeah, the crazy thing for me too is that their AI sector was down 10%.
Well, I mean, why are you going to go to Intel for AI when you have Microsoft, Google, ChatGPT? I mean, you have all these other, AI. Why are you going to go to Intel?
Yeah,
Are
rather than
are they even in a discussion? Unless you already, I mean, IBM. I, I, I mean, I would go to IBM before I go to Intel. When I think of AI, I don't think of Intel unless I already have a subscription contract with Intel as a company. I'm not going to go to them for that.
yeah. Well, with you saying that, it just makes me think about how far they've fallen since their glory days of the 1990s.
Who IBM?
No, Intel and
Oh
IBM,
yeah,
really, but
yeah.
IBM I think just had a decent earnings report if I remember correctly. But yeah,
They
Intel.
did because they were AI before AI was a huge thing with Watson way back in the day. Um, but IBM was if for those who are new investors and maybe younger and not they haven't really looked at the history of some of these companies, IBM led the way in computing back in 1960s.
Yeah.
They were the future. They were the SpaceX, the Elon Musk of their time during that time, but they have fallen from grace. But they are still active and they still making money. So
Yep. Visa reported earnings. Profit climbed in its fiscal first quarter. Um, they said they're citing resilient consumer spending here. Non-GAAP earnings per share came in at $2.41. Yeah, I don't have the information as to whether or not this is coming from debit cards or credit cards, and what percentage is coming from what. I think that would be interesting to look at. Let's see how, if it's really a resilient consumer spending, then most of their money should have been coming from debit card expenditures rather than credit cards. But if you strip out one-time items, non-GAAP earnings came in at $2. I'm sorry, $2.41 a share, where the expectations were at $2.34 a share. You were going to say something, Dave. Go ahead.
yeah, and I was going to go in the same point you were like, where's this coming from? Because customers are resilient. I think they're just using their credit cards because they don't have enough money coming in from their paychecks to cover things, and so credit cards are being used in the place of it.
Yeah.
See, I am one of those people who use a credit card as like a filter between me and institutions. I use my credit card and I pay it off every month, and I use it so that I can always deny charges. But a lot of people are using credit cards right now to buy groceries, and we've said this for about 2-3 months now. That's been the case. We've seen the trends. We've seen the higher credit card balances. We've seen household debt increase to record levels yet again. So yeah, I don't. The consumer's resilient. I do see that in all these numbers and data that's coming out and all the when I watch Bloomberg or CNBC. Yes, the consumer's resilient, but how they're resilient with credit card usage.
Right, right.
Like
So
how long can that last?
here's something that kind of sheds a little bit of tiny light on that. Visa said payments volume grew 8%, processed transactions rose 9%.
So
So
1% difference. Yeah,
yeah. And then
yeah.
the last thing I have to do, I'm going to save for my final thought.
Final thought. Go ahead.
All right, final thought here. Looking at a frontier market to put it into focus, Argentina just elected a guy named Javier Milei. I'm probably butchering that name. He is promising to privatize state companies, slash jobs, spending. Um, this is going to be short term painful, and what I hope he's doing, I hope he's looking back at what worked when it came to the shock therapy capitalism in Russia in the 1990s. Look at what worked and what didn't work there. Because what you're doing right now, you have the right mindset. You've got the right mindset. If you're too slow with it, special interests will intervene and block you. If you are too fast with it, you're going to create a lot of unemployment and there's going to be a lot of civil unrest, and people might force you out of your job. So you're going the right direction. You're walking a tightrope here, though. So be careful when doing it. I think, Argentina though might be a decent frontier market to throw some money into right now. When and there's going to be some shock here and all. That's why they call it shock therapy capitalism. Unemployment's going to go up because all these obsolete government jobs and government companies are going to either go out of business. There's going to be a lot of people that get fired. There's going to be a lot of people in the short term, at least, that get really angry about this. Now, if you look at Russia, the way that Russia did it, that did happen, but they were able to continue throughout the 1990s. There was a lot of unemployment at the very beginning. There was a recession at the very beginning. By 1999, the Russian economy was growing by 6%. I see great things on the way for Argentina, but it's a risk getting there, and it's going to be painful getting there. So, by the way, next week, what I'll do is I'm going to look into some Argentinian. What is that the right way to say it? I don't even know. I study
Argentine.
yeah, okay, whatever. I study international studies and stuff like that, but very terrible with my pronunciations. I will look into some companies from Argentina for next week, and we'll see what I think will be profitable from there.
Believe it or not, listeners, Brandon has traveled to many overseas countries and
Yeah,
has gone to college and taken college courses and all this stuff, and he's just horrible at it.
I'm horrible at that. So here's the thing: I know a lot about global history, and I know a lot about certain cultures and stuff. I just can't say the things out loud.
There you go. So my final thoughts, I don't have any calls. I don't. Just watch your earnings. If you see a company come out and they report some good news, or you see a company that's gonna report and you believe fully in the fundamentals of this company and the growth of this company, then maybe buy it ahead of time. But that's if you've done your research and you believe in the fundamentals, you believe it's actually gonna, no matter what, gonna go higher, and you're gonna hold no matter which way the earnings go. Because if you did all your research and you believe that the company's strong, then probably the earnings are going to be good. But if you believe in it anyways, I mean, why not buy it now right before the earnings and make a little money on up right away? So
Right.
that's gonna be it. I'm gonna watch natural gas this week. I want to see what happens of all the news that's happened over the weekend, and oil with the Russia tanker being attacked. If they start shipping it around the Horn of Africa, or if they continue through the Red Sea, that's one thing I'll be watching. All right. So as always, we hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.